Hey guys, AKIL'S here. Welcome back to another video. Hope you guys have had a great weekend, and of course, wishing you a great and safe week in the markets to come. We're gonna we're gonna take a look, right? Long weekend for me. Take a look at a simple setup here on the pound yen, and then kind of add analysis to it to show you how you could potentially get more out of the trade if you're either a higher time frame trader or just more aggressive. Now, if you guys are new to me, typically what I do is I do a top-down analysis. So in my trading, I go through a four-step process called IPDE, identify, predict, decide, execute, where I start on the higher time frames to identify and predict what I think is going to happen in the market. So I take a lay of the land, right? Take a big look, and based off that look, I determine a directional bias. Then I go down to lower time frames and look for the specific details of how I'm going to enter, stops, targets, all of that fun stuff. In this video, I'm going to do a little bit of the opposite because we're going to head out to a time frame that isn't one in my personal trading portfolio, but one that can give us some pretty decent clues. So we're going to pop down to the 4 hour here. And we're on the pound yen, and pound yen has been consolidating like many pairs as of late. And consolidation often breeds advanced pattern formations, harmonic pattern formations. And in this particular scenario, we have something called a Cipher pattern potentially setting up. I'm going to go ahead and measure it out. I'm going to start with my X leg right down here. This is going to be my starting point. This swing low to this swing high is going to be my X to A. Our first retracement is going to be our B. Our extension up here is going to be our C. And if we can work our way back down, this would give us a D completion, and this is where we're looking to take the trade at. Now, of course, each of these legs are, they come with very specific Fibonacci levels that they must hit. So we're going to take a Fibonacci retracement from my swing low of my X to the swing high of my A. You can see that price action does come down, hit the 3D2. That is our minimum requirement. So we can check that off. I'm going to take a Fibonacci extension from that same low of X to that same high of A and back down. And you're going to see that what we're looking for is a minimum of a 127 extension to be hit. Checks the box, right? Ka-ching. I don't know what the check sounds like. You guys get what I'm saying. And then for the decompletion, I'm going to steal my original Fibonacci retracement here. Once again, swing it from the low of our pattern, the low of X, all the way to the high of our pattern here on the opposite side, C. And what I'm looking for a completion point is this 786 retracement, which is going to be the decompletion, and the zone goes all the way down to my D leg. And that's going to give me something that looks like this: X to A, swing low to swing high, A to B, swing high to swing low, B to C, swing low to swing high once again, and a CD completion right here, where we are looking for a bullish move in that zone. Now, typically with advanced pattern formations, right, like many counter trend trading setups, when we're looking for these moves, we're not looking for full continuation moves. We're not looking for full reversals. We're just looking to kind of be mercenaries as traders. We're looking for a short period of relief, get in and get out, and that's why we have our targets at those Fibonacci retracements from the C to the D leg. So by all means, look to trade this as a traditional advanced pattern trader. But if you're someone that wants a little bit more meat on the bone, here's something to consider. Now, obviously, this must be aligned with your overall top-down analysis. Don't get influenced by the things that I'm telling you, right? Always do your own analysis. But if you are someone, we'll go to the weekly eventually, but let's go to the daily first. If you're someone that's been tracking the daily like I have, I'm going to delete this real quick. You've been seeing that we're in sort of a consolidative period. I was hoping to get an ascending triangle where we had equal highs. We just missed that a little bit. But if that 786 were to complete, we would have another series of higher lows here, putting in a nice little triangle pattern at the top of a minor level of structure, and consolidation or contraction often leads to expansion. Now, in its own right, a triangle pattern is really a neutral pattern. There's no kind of tell on if it's going to break out to the upside or the downside, and this is going to be fit for this case as well. But the fact that we're at a minor level of structure does give us a little bit of an idea that, hey, there may be a more likelihood that we break out to the upside versus the downside, especially if we can hold this higher low. What gives us more credibility is the weekly and seeing where our most recent levels of structure are at on the weekly. If we take a look at the weekly chart, right, you can see that we've been in a bullish trend for a very long time. We actually cleared, I remember looking at this last year, right, we cleared this intermediate high right here, and we're working our way to, I would say eventually these highs right here, 215s. But before we get there, this retest of structure. Now, the most recent move here on the pound yen has been this, right? We've been kind of moseying on up, and then we dipped down here, right? A lot of stuff was happening earlier this summer. We had a nice hold. We double bottomed right here, right? And then we recently broke and closed above our double bottom, which, right, confirms the double bottom. So if this double bottom is likely to hold, then we should at least see a move retesting the previous structure highs. Once we get there, it's another battle, and my counter trend nature says never expect anything to continue until it continues. If you're trend continuation, do what you may with it. But it does give us a clue that, hey, on the higher time frame, there is room to move higher here with the pound yen. And remember, if you're down on the 4 hour, setting yourself up with a bullish trade, well, you're getting involved in that same direction. So maybe it's worth leaving a little bit on. When I say a little bit on, I wouldn't, again, unless you have a higher time frame bias and this is just simply your entry reason into that bigger trade, I wouldn't risk everything for that big move, but maybe leave a partial position on. Maybe instead of taking a full position off at your targets, maybe you half it, or you take 3/4 off at a target, leave a quarter on, something just in case that big move occurs. And that's what we call home run trades in the market. So hope you guys enjoyed the video. Hope you learned something. If you did, hit that like button, that rocket ship button, whatever you have to hit to say, good job, Akil, and inflate my ego even bigger than it already is. I laugh because I have zero ego, or just enough to be good at trading, I should say. But as always, if you have any questions or comments, leave them below. I read through each and every one of them. I answer each and every one of them as long as they're not spammy. And once again, I wish you guys a great trading week. Be safe out there. And until next time, plan your trade, trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.